This episode is brought to you by Lumina Growth Lab. At Lumina, we help professional learning and development companies who are struggling with predictable lead flow, a sniper approach to attracting the ideal clients, and a system that qualifies leads so they can have a smoother sales process, finally have scalability, and ultimately take their business to the next level. Most of the time, our clients come to us frustrated because nothing seems to work outside of word of mouth and referral-based lead gen. But with the right strategy and support, they're able to confidently add new channels of lead generation and a packed pipeline that creates sustainable revenue and year-over-year growth for cheaper than ever before because of the use of AI technologies. If that sounds like you or someone you know, connect with me on LinkedIn, and I'd be happy to have a conversation with you about unlocking your business's potential. Now, let's dive into today's episode. Welcome to the Marketing Matrix. I'm your host, Lisanne Murphy, and today I am joined by the talented, one and only Forrest Jinks. Forrest, thank you so much for coming on the show today.
You're welcome, but hold off on the praise. You don't know if I'm talented or if I'm one and only yet.
Hey,
We'll have to find that out as we go.
I met you and I had a feeling about you. So you're going to have to do a lot of work to change that perception already. Guys, I met Forrest and was really just impressed with the work that he does and the competencies that he has in the field of equity. And so I'm really, really excited for him to talk about what he does with the businesses and how they create wealth for their clients. So I'm going to take a second to introduce him and then let him take the microphone and blow our minds today. So today's guest is someone who has truly lived every chapter an investor could imagine. Forrest Jinks is the founder, CEO, and CIO of Altus Equity Group, a real estate private equity firm that now manages more than $600 million in assets, with a bold goal of reaching $1 billion under management by 2030. Forrest's path hasn't been always a straight line. Over 2 decades in real estate, he's been seen wild success, crushing setbacks, and even a period where he had no place to sleep. He once tried to retire but found himself a little stir-crazy and came back to the business with renewed energy. Today, he's built a thriving, diversified investment platform spanning multifamily, industrial, built for rent, and retail projects nationwide. What makes Forrest compelling isn't just the scale of Altus, it's the story behind it. He's done just about everything in real estate, and through it all, he's remained committed to integrity, alignment, and authentic relationships. Guys, so again, big round of applause wherever you're at in the world, and welcome Forrest again to the Marketing Matrix. And thank you so much for taking some time to be with us and spend some time to disseminate your brilliance upon us all.
We'll try. Thank you. Thank you for having me.
Okay, so you alluded to it in your bio, but give us a little bit of a background. Like, how did you form this love with real estate? And I'm assuming you've played around in almost every area of the sector. Like, how did you land on doing private equity real estate? How did that happen?
That's a loaded question because there's choices we make because of things that we like. There's choices we make because of circumstances. There's choices we make because of expertise or natural kind of things that we gravitate towards. And I can't tell you exactly why I landed where we are. I can say that I started doing the real estate nights and weekends while I had a corporate finance job. That's how I got into it. I've always loved real investing, really, really big in investing, big on entrepreneurship. And basically from the day I graduated college, I was looking to figure out how I would be an entrepreneur because I had a business degree and you can't really get out of college and like, hey, everybody, I want to sell business. Like no one needs you unless you're working for somebody else. Real estate just kind of fell into what that business ended up being. And then as the business grew, when you first start doing real estate, it's really not all that finance based. Yes, you have to figure out what you're buying it for, what you're selling it for, what your rents are, but they're all pretty easy calculations. You're not worried about economics to a certain degree. But as the business grows and as you start looking forward longer and get bigger projects, it becomes really, really finance based. That's fun for me because I liked investing. I like finance. I liked economics. And so it just kind of grew over time along those lines. And You alluded to the rough times in not 2008. It was mostly 2007 and into 2008. Things were really, really bad for people that had been investing in the coasts. And most of what we were doing was redevelopment and development. Literally, we could not give retail space away. Just no one wanted it. And so during that time, it was kind of a natural off ramp if I was going to leave the industry. I had banks I owed money to. We had investors that still had money out that I wanted to get back. If I went and took a job, I couldn't do all that. So really, it came down to the only way that I was going to be able to get back to where I needed to be, which was break even at that point. Forget wealth. I just wanted to be not underwater. The only way I was ever going to do that is to stick with what I knew best, which was real estate investing. But there was lots and lots of lessons learned through that, and taking those lessons, applying it, going from, to a certain degree, what I would call like a local real estate developer and turning into a true investing business. That was a very conscious decision coming out of 2008. And so, growing and scaling from there.
Interesting. So you started as like with your own personal portfolio then, and okay, and then it moved into creating funds to then fund like much larger real estate projects.
That happened after the Great Recession. Up to the Great Recession, there's different kinds of investors that you have in real estate. One kind of like a joint venture partner. And pretty much all the investors that I had were just people I knew that we would do projects together. Sometimes I would invest my money with them on their project. Sometimes they would invest their money with me on my project. Sometimes we do projects together. Sometimes they were more passive than others, but it wasn't truly us going out and looking for investor dollars. And so the projects were much smaller too. After 2008, when we said, hey, we're not developers anymore. We're done developing. And when I say we, I ended up partnering with someone else that had a very similar story to me. We're going to be a true investment company. We're going to underwrite everything as investors, not as developers. And they're two different mindsets. And that's when we started making it a more structured, really came up with our investment philosophy, which oddly, I came across the notes earlier this week from what I'd written down back then. And our written philosophy today as a company is still very much in line with that. So it was good to see that kind of alignment after, at 17 years basically now, that we're still trying to do what we were trying to do then. And it's worked out pretty well.
That's amazing. So I'm really curious in like the very very beginnings, and the reason why is when I was in my master's program. Typically in a master's program, in between your first and second year, you go get an internship, right? And so I was like, I'm way above an internship. I don't want an internship. I know what I'm going to do. I'm going to start my own business. And so I started a real estate investing firm focused on wholesaling. That was like my very, very first entrepreneurial venture. I mean, outside of like doing things like as a kid, buying like cheap candy and then reselling it to your friends, like for more money or like something like that. Like,
But interestingly enough, you love marketing, right?
yeah.
Wholesaling is marketing.
Yeah. So
I mean,
here's,
it's all about finding the people that will sell to you. That's where the whole business starts. So the marketing piece of wholesaling is absolutely vital. So in a lot of ways, you were doing what you loved and you're still in that same path.
I'm actually really grateful you said that because what was really interesting. So it was my very, very first entrepreneurial venture. And like, so I knew zero. So like you ask me now, like, yes, like, do I love marketing? Yes. But a lot of it is because of that venture. So I joined this coaching program that was like, this is how you get started in real estate and do wholesaling. And for me, it was really attractive, right? Because like you're connecting buyers and sellers, you take a finder's fee for it, and you can walk away with these checks that are, like 5 to 20 grand for connecting these parties. But what I didn't realize was the amount of work that would need to go in to build the network. And like I was a college student at the time. And so like I'd never even owned a property. Like I wasn't one of those college kids that was like smart and was like, I'm gonna buy an apartment and then like have all my roommates pay my rent for me, like I didn't come from a background where like that was like even in my consciousness. So like jumping into the real estate world, like without even having rented a property and like going and I remember scouting these properties and like walking around with an appraiser, property checker person, like looking at cracks in the foundation and making sure that the valuation is appropriate. Like I was so freaked out, like so overwhelmed. And then like all of the contracts and like holding things in escrow and having an escrow agent that blah, 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 all of the things, like it was so intimidating to me. And I bit on way more than I could chew. And essentially what happened is that it was a great learning experience in my life. It was a very expensive learning experience because like I didn't go to my master's directly after my undergrad. So like I dumped like basically everything I'd put into my K from my very first job out of college, I'd put into this because I was like all in. And it just evaporated in a summer. The biggest issue was that I didn't know marketing. I didn't understand leads. Like to do well really in any business, but especially in a wholesaling business, it is about how to generate leads. I mean, and I tried many, many things. Really, I think it was a consistency issue. Like, had I stuck with it, I think it probably would have been successful. But like when like the cops started calling me because my bandit signs were on illegal corners, like I was like, okay, man, like this is too much. This is too much. So anyway, I know this is not necessarily about me, but I'm really interested in like how you've gone from like, I really want to know like where was the very beginning, because like the fact that you've built this to be like a $500 million, like over a $500 million in assets holding, and you made it through the recession. Like Forrest, that's really insane. Like that's incredible. It's absolutely incredible. So I'm curious, like what was like, did you buy a rental property to get started? Like how, like this is, I'm just blown away is essentially what I'm trying to say, because after one summer of wholesaling, I was like, I'm out.
So there are um, there are different ways to make money in real estate. I don't mean like the actual method. There's tons and tons of methods. But if you're looking at real estate, you can buy it below market, which is finding a great deal, right? That's what you were trying to do, basically.
Yeah.
You can add value to the property because of knowledge and entrepreneurial effort, etc. You can have a cheaper cost of capital than everybody else. That's like who you know, how much they trust you, how strong your balance sheet is, who can you borrow from. There is just time. Like real estate over time goes up, rents go up, you make more money if you just do it conservatively. And that's like any, it's investing in the S&P. There's going to be ups and downs and everything else, but just letting time work. I may be forgetting one or two of them, but generally speaking, as a real estate investor, you're going to fall into one of those categories. Did not, I looked at wholesaling, I looked at those things early on, but that wasn't what I liked to do. I actually felt really bad and guilty in some ways of doing like that kind of transaction. And so where over time we landed a lot more is solving problems for people, which means, and by the way, it can still be a wholesaling type thing. We never end up doing wholesaling, but where we have a seller that has a problem, they need cash really quickly. They have a tax situation they have to solve. But whatever it is, if we can come up with a solution for them, and the bigger the problem is we're solving, the more we get paid for it. I mean, that's kind of how it is throughout business everywhere in the world. I mean, no one knew that not having an iPhone was a problem until there was iPhones, and then everyone that didn't have one wanted one. So Apple solved this huge unknown problem and made, billions because the size of the unknown problem was so large. So part of the growth is really saying, how do we solve bigger problems? Now, that wasn't what you asked. You asked how it all get started. So I graduated college. I'd taken one real estate class, which was about mortgages in college in my finance degree. And I knew that kind of how underwriting for mortgages went. I wanted a new pickup. And I knew that if I bought a pickup first, I wouldn't be able to buy a house because the way that they do 30, I think it's 33% at the time of your adjusted gross income is what you could qualify for a mortgage. And if I took on $400 or $500 car payment, there was no way in the world I was going to be able to afford a mortgage. As it was, the only mortgage I could afford was a very small one. And a very small one, the only thing I could buy, and at the time I could get 90% financing, this was in 1999, was a very, very beat up, horribly run down house. But I bought it because it was the only thing I could afford. Well, it came with another lot, which was lucky. And I got to work nights and weekends cleaning it up. There was literally nicotine running down the walls inside the house. So I learned about TSP and how to clean it and, basically stripped it all the way down. And I didn't know anything about construction before that. like in high school, I'd worked on a construction site probably 10 days doing cleanup work or something for people just to make a little extra money, but I knew nothing about it. And so that experience was absolutely brutal because I didn't have any money to hire people. I mean, I was making $39,000 a year, and most of that money was going to the mortgage, right? And so um, I didn't have a lot of money, so I was doing it all myself, and I didn't know what I was doing. But over time, I learned. I hung out at Home Depot. I asked questions and learned and learned and learned. And then that lot, it came with a lot, so that got split off. Sold the house, recaptured basically all my bases, and had that lot free and clear. And so now I wanted to build on that. Well, that lot turned out to be in culturally, what was it called, the historic district of this town. And so, in addition to the normal entitlements and permits and everything, I had to go through the Cultural Heritage Board to get my plans approved. Well, that was just a year of dealing with politics and all these rules that really didn't have anything to do with anything. Like the fact that you had to have a wood window on the upstairs facing the road, even though it was behind a tree, and the window cost twice as much, just because that's what we want. And we're the Cultural Heritage Board because we want it to look like the houses around it. Never mind that no houses, like they were all different. There was apartments and everything else. But so that's when I learned about kind of working with government. And then I sold that house, bought two houses, fixed those up, sold those, bought some apartments, bought some land, started doing development. And it kind of went from there. I grew to be pretty good at seeing where the opportunity to add value was. And I was able to move kind of between product types, infill development, retail redevelopment, condo conversions, all these things. Well, those things all required entitlements, which meant I was working with governments. And I was decent at it, especially for someone a lot younger than the government people I was working with. But I absolutely hated it. I don't mind risk. I hate uncertainty. And when someone has complete control, like I could walk into the best product in the world, and if three of the five members in the planning commission have bad days, or their one friend is opposed to the project and they're standing up in the back of the room, the project gets voted down. We had projects where, like, every time there's a delay, it costs money. I've got holding costs, I've got architecture fees, I've got opportunity costs, I've got all this. We had a project where literally they didn't approve it because they wanted the eaves to be 12 inches instead of 18 inches. So I lose 6 weeks before I can come back onto the planning commission again to make this one change that's like nobody cares about except for these five people in the planning commission. The returns from that headache were really good, but the stress was just insane. It's more just the frustration, I guess. The
Sure.
frustration of like not having any control over outcomes. When I said, okay, we're not going to be developers, we're going to be investors. A big part of that was we're not going to be dealing with entitlements anymore. And to this day, we do not do entitlements. Like pretty much anywhere in the country, even places that are easy, we don't do entitlements. We'll build. We don't mind building. There's risks involved with that. There's still headaches. There's different things, but to a certain degree, they're controllable and quantifiable. And so we can model that. Like we can show the investor, like, here's the really bad case. This is what could happen. Here's the really good case. When you're dealing with someone else's whims, your really bad case could be off by a magnitude of 10, 5. Or in fact, we partnered with someone at construction stage. They took them 9 years to get the approval to build the building. In downtown, it was a blighted spot 9 years before they got the approvals, and we partnered with them after that. So we're out of that business. We don't like that anymore. But again, that all comes down to like refining the philosophy, and really being, I wouldn't say laser focused, because there's definitely different things that we'll do, but at least we know we have a framework that we work within.
Yeah. Well, I love that experience, how it's like you learned the next step to create a bigger opportunity for like the next project, right? And leveraging past projects to go into future projects. And then also you learn about like what do you like and what do you not like? And how do you do more of what you like? How do you get rid of or outsource the pieces that you don't like? And it's this iterative process. I think what's really fascinating about what you've done is that like through all those learnings and adjustments is that you've stayed in real estate, right? I think some people would have probably long before been like, I'll just make a lot of money elsewhere and then put it into real estate.
Which is a really good strategy, by the way, because well, there's a huge difference between being an investor in real estate and running a real estate investment company. So I'm very biased to real estate and private company investments and real assets. So I'm not at all in the markets, in the publicly traded markets. So that's a bias. I get it. I would be doing that whether or not I ran a real estate investment. But most of my income, not my investment income, but like my value creation comes from running a real estate investment company, which I could do even if I wasn't invested in real estate. So those two things are oftentimes in tandem, but they can be mutually exclusive in theory.
Yeah. I think it's remarkable what you've created, honestly. And it's exciting. And I love that, like, because you own it, right? Like, you get to call the shots in terms of like what projects you're involved in, how fast you want to grow, how big you want to grow.
There, yes, but I'm going to also say no, because let's say I'm a contractor and I'm the only person I get paid by the hour and maybe overseeing some jobs. In that case, I really control what I want to do and what I don't. But let's say as that contractor, I hire 10 people. That freedom goes away. I now have responsibility to those 10 people. I need to make sure that they have work, that I'm paying them, that they have the insurance they need, safe working environment, all those things. I now have responsibility. And now let's say I take on clients. I now have responsibility to the clients. I'm saying I'm going to have it done by this date. I'm going to do it for this price. I have responsibility. So yes, I'm still a business owner. I'm still maybe an entrepreneur, but I still have responsibilities. And in our business, we have shareholders. So I can't just go off and like on a whim do something. We have a board of directors. We've got a team that I owe allegiance to. You know, part of working at Altus is we want to make you wealthy. If you work here and you invest in yourself and do the things that we think need to be done to be wealthy, you will be wealthy. Like that's our pledge to our team members. So that's a responsibility. All of our investors, we have, I don't know what it is, 300 or 400 investors now. We have a responsibility to them to be stewards of their money because they trusted us to be stewards of their money. And so to some degree, I have far less freedom now than when it was just me with my own money doing development because I report to, if you will, much broader spectrum of people. In fact, our company, I don't know if you've read the book Why, but our company Why is we're invested. Why do we do what we do? We're invested. We're invested in our investors. We're invested in our team. We're invested in our network. We're invested in our residents that live in our apartments. We're invested in our tenants. We want to do what we can to help all those people succeed because if we're doing that, we'll succeed as well.
I love that. So what was like, what was it, the recession that was the catalyst to switch it from like your own personal portfolio to be like more of a, like a full on company instead of just having like your own little network to do stuff with your own portfolio? Does that
Yeah,
make
I
sense what
think
I'm asking?
yeah, it absolutely was. I mean, let's say there was lots of iterations, but that was the main iteration or the main kind of tripping point. Going into the Great Recession, I had different JV partners, and as like let's say we would get a set of plans done, and that would cost $100,000. So the JV partner would pay $100,000 to the architect, and then we'd get it through. We had to have to pay the city, the county, the state, whatever it was, bunch of fees. So they would pay that. And then we'd keep going and then there would be some construction and they would pay as they went. Well, that was great until all these investors are getting capital calls from their lenders. They're getting margin calls on their stock portfolios. All this things happen. Liquidity's gone. So we had projects that were 90%, 95% of the way done that had no more funding because they couldn't fund it out of pocket anymore. And like I could be mad about that because we had a contract, but what am I going to do? Like you can't get, as the saying goes, blood out of a turnip. People were in really, really bad shape. What is it? 15, 16, 17 years later. And a lot of the people that went through that are now retired and moving on to their careers. And some of that pain has gone away unless you go talk to those people and remember how bad it was, especially in California, Florida, some of those ground zero states. And so one of the big things coming out of it was, if we're going to do this, we want all the money raised, committed, and in an account up front. We don't want to do any pay as you go anymore, because we ended up holding the bag on a lot of things. In some cases, we were on the loans for those projects that were being funded by someone else. And now we're dealing with the bank and having to figure out how to pay off the bank, on a project that really wasn't ours. We just qualified for the loan. So there was a lot of things we learned from the Great Recession for sure,
Wow.
and still learn today. We make mistakes every single day and try to learn.
Yeah, that's remarkable. So I would love to talk for just a moment, like when we met, like you talked about how like you have. I was asking you about like who are your customers, and really it's like multifaceted because, like you said, like you have investor clients, you have building clients. Like there's just so many types of relationships that you have to maintain. So, can you share a little bit about like what are the different types of relationships, like who your customers are, and then like how do you prioritize like who gets attention or focus, or I mean that's like it's just there's so many, like lots of plates, you know?
So we actually differentiate it by, we have clients and we have customers. So, and I'll say a client is someone you have an ongoing relationship with and you work together again and again and again. Think about an attorney that you have an attorney, you work with them over and over and over. Your tax accountant, every year you go back to them, you're their client. Our investors are our clients. We might have some other clients that we do consulting for, or things like that, but mostly our clients would be defined as our investors. And our hedgehog, to quote Jim Collins, is to be the best in the world at taking care of our investors, our clients. And that doesn't mean that we're always going to have the best returns. It doesn't mean we're not going to make mistakes, but we're going to be just crazily, aggressively transparent, looking out for their best interests, making decisions that we can make for their benefit, bringing things with their attention that will help them, even if they may not realize it. It's painful, and maybe even at our cost. So that's our hedgehog. But on the other side, like you said, we have customers. We have residents at our multifamily properties. We have tenants in our commercial properties. The way that to a certain degree, customers are more generic, more interchangeable. Yes, we want to have that resident stay there for year after year after year, but I don't have a personal relationship with all of our residents. The individual property team has that relationship. So we're trying to get to train the team to make sure we're doing the things to take care of customers. We have a different team, our investor relations team, our accounting team, like really our corporate team. It's our job to make sure we're doing a great job of taking care of our clients. And marketing too is very different. You do one set of things to market for customers, much more shorter turnaround. You can measure the efficacy much more quickly, and whether any promotions working and that sort of thing. Clients, we have a monthly, I don't know if you call it newsletter. It's like an article we write every month with thoughts on investing, the geopolitical environment, economics, whatever it is. And it goes out to a database. We've had people read those things for years and then call us up one day and say, "Hey, I want to invest." And we're like, "Well, who are you?" I've been reading your Altus Insights. And like, oh, they've gotten to know us through us sharing this information, saying what's important to us, where we screwed up, these sort of things. And so the client relationship is much more long-term focused. The customer relationship is a little bit more shorter-term focused.
Hmm, that's cool. I appreciate you outlining who they are and that distinction as well. Why talk to me about your clients? Like why private equity? Why would someone want to invest in private equity as opposed to potentially having their own real estate portfolio?
That's again a multifaceted question. So let's start with why real estate at all. If you know prescribe to just investing theory, people would say you should have a diverse portfolio. So stocks, bonds, you might want to have some real estate, you might want to have some precious metals, whatever the case is. Most investors, even today, especially in the wealth management world, view real estate through the lens of like REITs. So they're still traded stocks, just in REITs. Well, there's benefits to private investments. Generally speaking, you're giving up liquidity, which a lot of, again, the wealth management world looks as a negativity. I view it as some positivity because I'm not tempted to sell when there's a bad day. I'm in it for the long run, and long run is what builds wealth over time. But because that lack of liquidity, the returns in the private markets should be considerably better than the public markets. So if you're looking for absolute returns, private markets should do better. Now, you do need more, to a certain degree, expertise on how to invest in a private market through companies like us. There's a lot of bad companies. You need to be able to interview them, look at them. The financials are generally not going to be audited, or maybe sometimes they are, but we have some that are, but they're not going to be like, you can't just go to the SEC website and pull them open. So there's pros and cons there. Um, Again, I like real assets. So I want more real estate. I don't want stocks and bonds. I want something I own tangible, even if it's through an entity, which is called a single purpose entity. Myself and my partners in that own that real estate. If it doesn't go well, we know exactly why it didn't go well. If we don't want to ever have a chance of losing it, then we don't have any debt, and then we're not going to lose it because we own real assets. So that's a big part of it, and an allure for some people now. And I think more and more people just don't trust the public markets. They don't trust the bigger corporations as much. There's been, fraud. There's different things in the news. And because of that, people are moving more and more towards private assets and things that they can physically touch and see. So there is more money moving into the arena. One other thing about real estate is if you invest it with this goal in mind, you can have much better yield than a lot of other investments. So if you are looking for cash flow, you can have really consistent cash flow through the right setup of on your portfolio.
Would you say that it's safer because like not all of your money is in like one house? Like it's even if it's one project, like it's diluted across multiple investors or
I'm very hesitant to say, broadly speaking, what's safer or not safer, because every single investment has different levels of risk. Every single company has different levels of risk, like their expertise, their transparency, how they treat people, their experience, their financials. And the public markets have different levels of risk. If you're investing in the S&P 500, you're never going to lose all your money as long as the stock market exists. Because if a company goes out of business, it's just replaced by another company in the S&P 500. If it drops out of the S&P 500 and your portfolio through that fund is adjusted. So if you're saying, well, is it safer than investing in a tech startup? Yeah, probably. But what if I'm doing an entitlement that has huge upside, but requires the city council to sign off and me to get approvals from the local water agency versus BP? Well, the development probably has more risk, but I still can't answer that until you tell me what I'm paying for each of those opportunities.
mm,
Because Palantir, at a whatever crazy price to earnings ratio they have right now, inherently has more risk because of the price to earnings ratio, despite how strong a company it may be, than, I don't know, a Starbucks standalone with no debt that's paying me, 6% a year. Because I'll always have something. Palantir could go out of business. So just there's so many inputs to determine what is more or less risky that it's a hard
totally.
question.
No, I really appreciate you illuminating that. That's so good. So tell me this. Are you like with like your role that you play in your company right now in terms of like your workload, like do you ever look back at the early days and you're like, "Oh man, I really miss these elements of that." Or like you has like what you're doing has is it just been like increasingly more aligned with what you enjoy and what you like more of? Or do you sometimes like look back and you're like, "Man, when days were simpler, those were the days."
So there was a point probably around 2014-ish, 13 or 14, where I very specifically made the direction or made the decision to build a company. Um, the decision took months, and it was the conversation was, do I just keep doing stuff on my own? I've got, a decent group of investors. They'll fund me. I could do 3 or 4 projects a year. I can have a really nice living, save money, build over time. Or do I build a company and focus on building a company that services people? I landed on building the company because it was going to challenge me to keep growing. Every day is different than the day before. As our assets under management grow, I've never been a CEO of a company that size before. As we add one more investor, I've never been a company that had that many investors before. Every day is new. And the decision to do what we're doing really came from that. Like,
Mm.
let's build something lasting that is beyond me. The other scenario, if I stop, I'm done. There's no more projects. There's no more income from the projects. With what we're doing now, I hope, anyways, Altus can exist into perpetuity as a going concern because we have great people, great systems, and a culture that is focused on helping and solving problems for other people. And if we have that, yeah, I still add value. I'm not quite ready to be put out in pasture yet, but Altus could exist without me. And I think that's a big win. And that's always been, since that day, that's been a huge goal of mine, is that Altus continues to grow and be a great company and a better company, frankly, after I'm gone.
I love that. Yeah, well, and that's really what, differentiates like the ability to be able to step away or have something exist beyond you either being involved because it's either it's sold or it's passed down or you pass away or like whatever it is, like to create an asset like that, like is it's remarkable. It's challenging to do. I think most companies, are like the owner is the company. And so to have that be something that you're striving for is great and noble for sure because it's not.
Yeah, I mean, everyone has their own definition of nobility, I guess. And it's funny when you go through this process, my knowledge of real estate and investing in the early days was vital to our company and to its growth. That was a value creator within the company. Now, my knowledge around that actually hinders our growth. Like, it helps in the micro, but it hurts in the macro because there's this dependence on, let's just go ask Forrest,
Yeah.
or what does Forrest says. As I shouldn't say as we, I can't speak to other people's journeys, but as I go through the journey of, growing a company, things that are strengths become weaknesses, things that are weaknesses become strengths, and maybe even once or twice or three times as you go through those cycles at different sizes of teams and different sizes of activity and different sizes of investment.
Yeah. So great. Well, Forrest, it's been seriously a joy having you on the Marketing Matrix today and hearing about your journey and how it's evolved and how you dealt with market shifts and economic downturns. It really is a joy talking to you, and I really appreciate you sharing your journey and experience and expertise on the Marketing Matrix today.
Oh, thank you for having me. That was fun.
All right, guys. So Forrest, how do people follow you? Find Altus Equity Group. Like what's the course of action here for our listeners that are ready to invest?
Well, if you're ready to invest, yeah, that's definitely go to the altusequity.com. You can reach me, FJinks, FJINKS at altusequity.com, and I'll make sure I get you hooked up with the right team. But just on information about real estate, about investing, you go to altusequity.com/insights. There's years of articles there. There's references to other articles. There's a ton of great resources on the web. And if people are interested in that, you can really learn a lot. And by the way, ChatGPT is now great as well. Don't trust it. Don't trust it. It's wrong a lot, but it also can give great insight and get you, moving down a rabbit hole to where you can find, the right information, but at least it can help you along asking the questions that need to be asked. Because real estate's like a lot of different things. It's less about the answer than it is about asking the right question.
Mm.
And that's the important thing. Altusequity.com. I'm on LinkedIn. I don't know what my specific thing is because I don't do it a lot. And we don't really have social media. It just hasn't been our thing because we're really relationship based. We love to make relationships, happy to make new relationships, but you're not going to find us on Twitter or Instagram.
You got to be on the inside to work with Altus. That's what
That's
I
right.
picked up right there.
Yeah, it's a small group.
That's awesome. Guys, well, I'm going to put the links to Forrest's LinkedIn profile as well as his company underneath the episode so you guys can find those resources and connect with him. But again, Forrest, thank you so much for behalf of me and all of our listeners for sharing your knowledge today on the Marketing Matrix.
Thank you.